It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian stocks extending gains fueled by a rally in chip stocks. On Wall Street, you have optimism over the deal between Iran and the United States.
We're expecting a big data dump here today. Economists expecting China to post a drop in retail sales and a deeper contraction in fixed asset investment. We'll bring you that data at the top of the next hour.
Also ahead, the Bank of Japan is set to raise its benchmark interest rate to the highest in more than 3 decades today to tackle inflation and the weakness in the currency.
And Xiaohongshu said to be preparing to go public in Hong Kong, joining the wave of Chinese tech firms raising billions in the city.
Okay, yeah, the tech rally is still here. We're running out of ways to say tech is
intact,
leading these gains. The AI story is very much a structural theme. I guarantee you'll hear a lot of that, of course, through the course of the next 2 hours or so, but it is really the theme as far as markets go. You look at the likes of Korea, Taiwan is coming online, 5.5% rally overnight on the Philly index. And yes, it's there. To be talked about.
I mean, when you have SpaceX in the second day of trading, they're surging some double digits once again, right? You add that on the back of this big sort of NVIDIA news about how much they're raising in the bond market as well. So that continues to funnel into the whole AI trade and the tech trade here in Asia today, as you see when it comes to the Kospi and Taipei. Still seeing some gains here. Not like the 5%, 6% that we usually see, but at least we are extending that here on a day of plenty of macro risk out there too.
Yeah, there's a ton coming up over the next, let's call it 3.5 hours. We get started in 30 minutes. We'll see, of course, home prices coming out of mainland China. So 30 minutes after that, it's a data dump for May. Sometime within the next 2 hours or so, we are expecting the Bank of Japan to raise interest rates. Most economists do expect them to raise interest rates even further, 1% for the very first time, going back to 1995. And, of course, we go into then the RBA, which is also out with a decision today.
Yeah, 1995 for millennials like us, it feels like it's 5 years ago, but it's not. It's actually, when you do the math.
Well, I still listen to music. That's still top of my playlist.
It's actually 31 years ago, right? That they've actually
had crazy
at that rate. So certainly, it's not going to just be about the holder hike. It's really about the messaging, right? This is a meeting that Ueda is not going to be there. He has been hospitalized, and so Deputy Governor Uchida, that's the one to watch out for. He is largely in line with the likes of Ueda in terms of policy stance, but interesting how he delivers the message, the tone, and really how deep and how hawkish he can really be in this sort of potential rate hike cycle now for the BOJ.
Yeah, we'll see. And what the difference is between, they've been saying they need to keep normalizing policy. At what point does that become tightening policy? And
we'll actually lift the yen.
Yes, which is still stuck at about 160 against the U.S. dollar. Right. The other thing we're focusing on, and we'll hear more from our guest exclusively in about 30 minutes, is Jardine, of course, is coming out with its annual investment, annual report, and annual target specifically here. Shares are up 2% in Singapore among the many things that they've laid out. Number one is they've now put out a target of at least 9% in terms of total return. That's an annual figure. That's over the next 5 years. We're also going to get more meat in the bone as far as how they plan to get there, whether that's increased profits, minority stakes, a dividend that seems to be increasing, and as far I think it's 5% is what they've laid out here, plus a buyback of $500 million over the next into the end of next year. So we'll speak with the CEO later on to help us understand how they plan to get there.
Yeah, Lincoln Pan, 6 months into the job, and certainly we have continued to see the restructuring of this company from a traditional conglomerate to now an investment firm. So we're going to ask Lincoln, of course, where we are in that whole discussion here right now of clear targets, they say sharper focus and enhanced returns. That's what has been the headline from that investor day in Singapore today. In terms of the Greater China agenda and what's on tap, we talked about that activity data data. Expected to see a pretty soft set here today when it comes to China. Home prices are going to be first in front there in just about the bottom of this hour. There is going to be a dim sum bond sale as well.
Yep.
Renminbi strength, given the dollar moves that we've seen to the downside here on the back, of course, the geopolitical temperature going down. We have heard from President Trump at the G7 talking about how the Strait of Hormuz, they're still scheduled, they say, to reopen on Friday, and that him and J.D. Vance did sign this electronic copy of this MOU yesterday overnight. Zhipu was one to watch, given just the massive surge we saw, right? Not just when it came to the JPMorgan upgrade, but they also launched a new model, or at least some sort of tweak of the new model. So certainly that continued to lift the stock here as well. And onshore IT tech continues to be a focus here today.
Really big move in that specific sector yesterday. I think we were up 5-6%. So certainly that is a group of stocks we'll be tracking in the onshore open today. Right. Let's get into the top stories today. So we have, of course, a data dump coming out of mainland China and, of course, the BOJ decision. Joining us now is our team. Taro Kimura, our senior Japan economist, is in Tokyo for us. And here on set is Min Lo, our China correspondent. Taro, let me start with you and the Bank of Japan. So they're set to raise interest rates. What else are we tracking?
Of course, a hike to 1%, highest since 1995, and it's reportedly the BOJ is going to stop tapering. The big picture of the balance sheet roll-off won't change in my calculation, but the BOJ will send the rates market some, calm down, and I admit the long-term yields has been jittery, so I think the BOJ will show that its eye on the jittery bond markets. And of course, as you mentioned before, the Deputy Governor's Uchida's play style, we don't have a lot of visibility. I'm expecting rather a dovish remarks from him, but the markets should be ready to watch the remarks from him.
Walk us through what the tone, the messaging would likely come from the deputy governor. And do you think it could differ much from what Ueda has previously said?
I think he will do his best to keep in line with Governor Ueda. And I think he can, because I think he's also an advisor for Governor Ueda in a practical terms. He was working for BOJ for decades, so he has to be a brain for Governor Ueda. So I think he's will be comfortable to speak in line with what the Ueda is signaling. And also, remember, he was the guy when 2 years ago there was a significant market crash in the summer when the BOJ rate hike then was attributed partly. The Uchida was the guy in his speech. He steps in and say, we won't hike when the market is jittery. So he delivered a very significant dovish comment. So the situation is similar. The yen carry trades are ramping up, and he truly understands unnecessary hawkish signal going to lead to a market jolt. So that's why I think he will be tilt to dovish, and also he will speak very cautiously.
Taro, that's a good point, and I want to ask you then, do you think the focus of the BOJ will be more targeted to markets than a reference to the economy?
I think it's half and half. Of course, inflation pressure is looming, although oil prices are declining, but the oil prices has been elevated long enough for Japan's CPI to elevate, in my calculation, probably more than 3%. So therefore, the BOJ needs to show its guard against inflation. At the same time, they need to manage, in reality, they need to manage the balance from pro-stimulus government interference, and they cannot sound very hawkish. So I don't think the BOJ will, signal any timing of the next rate hike, and rather probably explain some developments in cooler oil prices, and they need to see a wait-and-see mode before they proceed the next rate hike. So I think the Uchida will steer the balance between hawkishness and dovishness.
Taro, thank you. Taro Kimura there, our senior Japan economist from Bloomberg Economics, joining us from Tokyo. I'll get to Min now, really, because economists are expecting China's consumer spending to contract in May for the first time since the pandemic. So certainly we're expecting some softer figures here. Min, tell us a bit more about what else is in store.
Yeah, overall, the figures just don't look very good. I think industrial production is the only metric that is expected to accelerate from the previous month, and this is largely because of the boost that we got from those export demand for the AI-related sector, right? Whether you're talking about exports of chips or computers or chip-related components, that is boosting the industrial production print. But you look at retail sales, a contraction of 0.2%, the first time since COVID reopening in 2022. And some economists are saying that it is payback after all that purchases of home appliances and cars had been pulled forward because of the government subsidies last year. And fixed asset investment as well expected to decline for a second straight month after a surprise slump in the month of April as well. And this is partly because of bad weather. We have a heat wave, you have heavy rainfall that put a pause on these building of factories and infrastructure. But at the same time, bond issuance had also slowed down. But this is where we could see fixed asset investment easily pick up in the second half of the year because it's something the government can control. And we know the government has earmarked about $1 trillion for this build-up of infrastructure, what they're calling the 6 networks, including what we reported on earlier about those data centers across the countries as well.
Implications which part of the economy might get more support and stimulus moving forward then?
Yeah, so we talked about the 6 networks. So it's infrastructure, the data centers, the power grid, the water networks, for example. And of course, there has been increasing calls that maybe the government needs to do more to really unleash the domestic demand, right? So there is still room for the PBOC to ease at a time when central banks around the world are hiking rates. But because we have imported inflation coming back, economists are saying that, the PBOC doesn't have to be so urgent about it. Maybe perhaps closer to the end of the year or possibly even next year. But remember, tomorrow is the Lu Jiazui Forum in Shanghai where the PBOC governor will be speaking. So perhaps that's when we can hear a bit of a hint about what the rate cut trajectory would be like.
Okay, Min, thank you so much. Min Lo, our China correspondent there. We'll get more context really on the 2 top stories we just discussed there, the data dump coming through, top of the next hour, and also, by the way, that briefing coming through out of Beijing. UBS Securities joins us when the numbers break, and of course, alongside when the BOJ is expected to announce its latest policy decision. ING, of course, will be joining us also at some point in the next hour of the China Show.
Yeah, but in the last couple of minutes, we are tracking this interview that the U.S. Vice President J.D. Vance is making and giving to the likes of Fox here this morning, so this evening in the U.S. So the Vice President is saying that he would invite others to invest in Iran if it complies, and the toll-free Strait of Hormuz is explicit in the agreement, and they will release the text of that agreement on Friday. And also when it came to the question about enriched uranium, he says we will destroy enriched uranium with Iranians. We will destroy it, but I don't know grammatically if they
what does it mean?
I think maybe it might be a grammatical error here, but we will destroy, I guess, enriched uranium with the Iranians. So that is the latest when it comes to the situation in Iran there. So pretty much nothing new, but really talking a little bit more about that agreement. We're still kind of getting the details of both sides of what was really going to be in that MOU. So certainly still waiting for a bit more detailed text on that front. Of course, in the meantime, we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Right, welcome back. 15 minutes to the opening bell here. We're looking at A50 futures up about 0.1%. I think Korea continues to remain the proxy for this massive appetite that goes back into tech and AI once that window of opportunity opens up. And as you can see, it's outperforming yet again today. Just keep in mind the Philly index overnight was up 5-6%. So that's really the tailwind coming through in the Asia Pacific. Joining us here on set is Tai Hui, APAC Chief Market Strategist at JPMorgan Asset Management. We're just getting some lines coming through here, Tai Hui, on this negotiations going into Friday.
Yep.
Assuming things do reopen on the Strait of Hormuz on Friday, what does that mean for markets?
Well, I think obviously the natural reaction you saw yesterday already is a risk-on sentiment because ultimately we've just managed to avoid the worst-case scenario when it comes to the macroeconomy on oil, gas, and petroleum or petrochemical disruptions. So I think from that perspective, it will still take a number of weeks, if not months, for normality to be fully restored in terms of flows, in terms of inventory going back to a more comfortable level. Oil price will probably stay at above $80 for quite a long time. But nonetheless, I think the shortages that's been hitting a lot of economies, especially in Asia, that is likely to be averted. And that's why you've seen a strong positive reaction, for example, in Indonesia. You saw the rupee rebound quite a bit yesterday. So I think the good news is, from an investment perspective, it's no longer just about AI and tech. There could be a cyclical factor now coming back into play to help investors to generate returns.
Yeah. Now that you see the risk receding a bit, how do you bring back those pre-war playbooks? Do you go back to what worked in January, in February, or as you mentioned, there's some really unloved markets out there. Is that where the value is now?
Well, I think for some of these markets, for example, in Southeast Asia, we have to be still reasonably selective because it's not just oil prices. Domestic policies also play a role as well. But at the same time, we've seen a lot of enthusiasm on tech, on semiconductors. Look, the truth is, for markets like Taiwan and South Korea, the shortages in memory chips and CPUs, they're not going away anytime soon. But could we still see a sustained earnings growth that we've seen in the last couple of quarters? That is a bit more questionable. So I think this provide maybe a similar playbook in a way that you could be looking at banks, looking at industrials. And the other question is, after this war, hopefully, again, we keep this at bay for a sustained period. What does that mean for global energy supply? Are companies or governments going to diversify their energy sources both geographically and by type? What does that mean for defense? We've seen in this war, high volume, low unit cost weapons like drones really play a huge role. Does that change how governments are going to spend their defense spending? It's not just about spending more, it's about spending in the right places that will be effective in both defense and also deterrence to potential attacks.
The last 18 months have been dominated by either tariffs or the war. Assuming the war is over, assuming that's a big if, is there anything on the horizon that looms large over the macro picture, or does that seem clearest in the last 2 years?
I think two things. One is obviously you still have the lingering inflationary impact. The good news is we have not yet really seen a pickup in inflation expectation. So this week, the Fed, I think they rightfully stay put. The question is, do they expect inflation to stay, or do they see this as only a blip or just a one-off event? I think that's absolutely critical to observe this week. The second thing is obviously there could still be quite a lot of political changes. We have a local election in the UK this coming week. We could see more challenges for the Prime Minister. And of course, we've got the midterm elections coming up later in November in the US. And that, again, could change the calculus of the Trump administration, how they apply policies. If they don't have the full support of the Congress anymore, how will they execute their agenda? For example, do they rely still more on executive decisions or executive orders? We've seen tariffs now coming back into play with the Section 301 and Section 232 investigations. So I think, the politics, I think, will come back into play, but maybe more domestic rather than foreign policies.
We were talking about all these IPOs that are happening in the U.S. when it comes to frontier tech or AI. And then there's a lot in the bond markets as well. I mean, some would say this is a signal of a peak in this whole sort of trade. I mean, do you see it that way?
Well, there's no doubt that in terms of momentum, in terms of tech enthusiasm, there's a very high level of which, and some of this being reflected in valuations. But at the same time, are we in a sort of irrational state in general? Probably not. If you look, for example, Max 7 year to date, 3 Max 7 stocks is down year to date, 4 is up, and the best performing one is only about 15%. So I think what you've seen is a rotation of tech stocks from AI model generators or AI model companies to this year more semiconductors. So I think investors are rotating. It does not necessarily mean there's a peak, but I do have a question of whether we can still see that strong level of return generation in the second half of the year. And that's why, when in the mid-year outlook, we sort of advocate, let's broaden our investment horizon a little bit more, both geographically and also by sectors, not just relying on technology. I think that is still an attractive place, but some of the more cyclically sensitive sectors like financials, like industrials, maybe even consumer discretionaries could come back into fashion.
How do you feel about Korea and Taiwan now?
I think the fundamentals are still pretty robust. If you look at For example, KOSPI price-to-earning ratio is still single-digit at this point. So the fact that we've seen massive performance in the markets is being matched by massive performance in earnings growth. Now, I don't think anyone realistically is expecting 50, 100% earnings growth in 2027, but the shortage in manufacturing, the pricing power of a particular number of companies, those are still likely to be sustained. So you may not get the 100% earnings growth, but it's not going to collapse right away either, as long as companies are still investing in AI. So I think, again, I'm not expecting the same degree of performance in the second half, but I think the fundamental supporting what we've seen so far is still reasonably robust.
For China, though, you're saying that sector-level catalysts are emerging. What are those catalysts now?
And what does that mean?
So, look, I think the challenge here is the index performance being quite disappointing, especially relative to the rest of the region. But if you think back to the index, it does not have a lot of the sexy stuff that's been driving the US and the rest of Northeast Asia. Semiconductors, AI hyperscalers. So from that perspective, those companies in China have actually done quite well, both onshore in China and also in Hong Kong. But because they are only a very small part of the index, it's not big enough to drive the index performance relative to Taiwan or South Korea. So I think that's where we need to focus more on, and that is, look, clearly China has a policy to become more independent on semiconductors, on models, on inference, and you will see more public resources and business demand going into these areas. So, rather than just thinking about where the CSI 300 is going to be or Hang Seng Tech Index is going to be, you really have to focus on specific sectors such as AI as well as semiconductors.
Tai, thank you. Tai Hui there, APAC Chief Market Strategist at JPMorgan Asset Management. Coming up in just a few moments, we'll be speaking exclusively with the CEO of Jardine Matheson ahead of their Investor Day after their transformation, of course, from conglomerate to an investment firm. Lincoln Pan joins us in just a few moments. Pre-market is looking like this here right now. Of course, a lot to take a look at when it comes to not just the tech space, but Hang Seng, though, pretty soft right now, or pretty flat right now. So are futures here this morning. This is Bloomberg.
Okay, welcome back. Just going into the session today, so I think it's worth pointing out, we have a couple of macro events today, I think in 5 minutes. New home prices are out in 30 minutes, thereabouts, the data dump, BOJ, RBA, that's just the Asia Pacific. It's worth pointing out, though, that markets seem to be very range-bound, with the exception of a few, of course, bright spots like tech. So we've almost fully priced the news on Iran and the U.S., and I think really what could come next will obviously be the next catalyst here. And I think the question for markets is oil at $80, best case. What does that mean for risk assets moving forward?
Yeah, certainly that's going to be the big thing to watch here, right? And people, at least strategists, tell us that is the biggest indicator of how they deploy risk moving forward here. Yeah. So certainly that's one thing to watch. And of course, as we count down to not just the activity data with the BOJ that could happen in the next few hours or so, and certainly when it comes to analyst actions, we're watching the likes of Nongfu Spring rate a new outperform at Bernstein here this morning, and still watching Zhipu shares after that 30% gain there as JPMorgan picked it as the AI winner. We got the open coming up next. This is Bloomberg.
Good morning and welcome back. You're watching the China Show. Just under about a minute to the cash market open. As you can see, the approach to at least the greater Chinese markets is one where we're seeing some consolidation, also fairly bad weather. If you're here in Hong Kong, it's been just raining all over the place. We are set to also get a lot of data coming through today, so in the form of home prices in a couple of seconds. So we'll break that. And of course, once we have that, of course, we then move into the activity numbers. And of course, there's a live briefing in Beijing in about 30 minutes.
Yeah, we'll bring you the latest when it comes to, of course, the Chinese capital there on what they're saying, what's the messaging around the macro outlook. Continue to see a lot of softness, particularly when it comes to the consumption side. Yeah. So those retail sales will actually look pretty bad there, the worst that we've expected to see since COVID. So that's one thing to watch here. But in terms of the macro side, I don't know, markets are still really kind of talking a little bit more about the tech trade here today, just given all the kind of good news that we saw overnight when it comes to the SOX index here. NVIDIA is raising money in the bond market once again. And so there you go. When it comes to China not participating in a bit in this rally here today, we're flat when it comes to Shanghai. CSI 300 is just around that 4,900 level here. And you're seeing some pressure in some of the tech names like Capricorn Tech, for example, which is lower by about 1/5 of 1%. Shanghai crude continues to be lower here this morning, though. So we have kind of saw the biggest drop in 2 weeks when it comes to crude prices. Looks like we are continuing on with that trajectory here today. And CATL, though, at least that one is seeing a bright spot. We're up 2% on the onshore market here this morning. Take a look at how Hong Kong is faring, because Shenzhen still looks pretty good, though. There you go. Chinex is up 0.9 of 1%. So once again, you're still focusing on those AI sort of pure plays, AI supply chain, where that really concentrated in Shenzhen, of course. Hang Seng is not doing too well. HS Tech is lower by about 1/5 of 1%. Most of the China big tech is lower here. Baidu's down. Meituan's also down more than 1%. Tencent might be the exception here today. We'll see. But we're still seeing some strength in the currency here. 675.96 right now. But it's a pretty slow day. There's not a whole lot of conviction, though. And we're focusing very much on one stock, Zhipu, right? When we talk about what's been going on, that stock, thanks to JPMorgan, upgrading it. We saw basically a 30% gain yesterday. It looks like we're extending that rally here. As they said, this is probably the AI winner in China here. And, when it came to Zhipu and Minimax, they chose the former. So that's why you're seeing that 3% punch once again here today. Chip stocks, we talked about that. We saw Capricorn Tech slightly under pressure. We'll see how the rest of the industry leaders are doing here today. There has been news of Inflame. I think that's how we say that company. This is one of the fourth of the AI dragons that is expected to actually list in the starboard there. So apart from that, plus the Xiaohongshu news, looks set to IPO in Hong Kong as well. There is still some incremental good news in the tech front there.
Yeah, that's going to be something that we'll get into, of course, at Xiaohongshu, and almost ironically, as we frame it, that's probably not going to be a little red book when you look at the size of that book. It's going to be a big green one when that comes to market.
大绿书.
Yes.
You're going to talk about
the opposite of that. Okay, let's get back to some data that's just crossing right now. 0.2%, that's the drop in May new home prices. That's overall, that's a month-on-month read, of course. And just in terms of context, that's a slight, ever so slight acceleration from the drop that we had back in April. This brings to mind the conversation we had, I think, about last week with PAG, of course, and the co-founder there, Chris Gradle, who joined us in Bloomberg Invest. And he's watching this very closely as a proxy to risk appetite and consumption. And he says the course of direction of travel is clear, but it's slow goings in as far as this is concerned. Home prices are out, and of course, activity numbers are set to come out in about 27 minutes from now. Okay. Let's pivot now and take you straight back to this big announcement, the first ever investment day out of Jardine Matheson here, and some of the key takeaways that they've laid out about 30 minutes back, stock price on your screens. So a couple of things, the growth in dividends by at least 5%. I think the last print was at about 4%. 500 million share buyback into the end of 2027 rather. Why am I going back in time here? And at least overall shareholder return, at least 9%. That's an annualized figure on your screens. Joining us now exclusively to talk us through these numbers, the plans, and everything in between, Lincoln Pan, CEO at Jardine Matheson Holdings. Lincoln, good morning. Thank you for joining us. First ever investment day. Let's focus on the whys. Why hold it now at this point in time?
So thank you, Yvonne and David, for having me on again. Part of our goal today is to communicate our direction and strategy as a business. I think as we talked about previously, Jardine is going through an evolution. We've never given targets. We've never given forward targets of where we'd like to go with TSR, recycling, or with capital deployment. And part of our goal today is to set out those goalposts so investors and partners of ours have a better sense for where the company is going to go.
So, I mean, obviously, it's been quite a transformation, Lincoln, in the last 6 months since you took the reins. I think Bloomberg data has crunched it, proposed or completed at least $10.5 billion in asset sales and M&A. Where are you in that pipeline here in terms of shedding more non-core assets?
Yeah, so last year we recycled just under $5 billion in assets, and that partly set us up to use capital both to drive a buyback program, grow our dividend, but importantly, put new capital to work. In the recent transaction we acquired for a company called iMed Radiology, which is the largest radiology clinic in Australia and New Zealand. So again, this is not just about divesting assets, it is about putting new capital to work and building new pillars of growth for Jardines for the future.
Yeah, and I understand the CEO and CFO of iMed is joining your investor day today. Can I ask you about the buyback? Because you are, of course, coming off an existing buyback, correct me if I'm wrong, $250 million. When does the $500 million actually begin, if I could just ask the timing question?
It begins, we are almost done through the previous buyback program, and it'll begin right away. Again, this is our continued view as we see value in the Jardine Matheson stock. We are trading at a material discount to the overall value of the business. And our goal here is continue to push many of the things we've been doing the last couple of years, which is continue to simplify the group, recycle capital, grow our private holding portfolio, and increase our target rate of return for the entire group. So again, this is all part of the direction of the business now for the last couple of years.
Which is 9+% as you laid out just now. Just another question on the buyback, though. So this goes into end of next year, Lincoln. Do you see the buyback as central to your plans to return money to shareholders? In other words, not to commit you well beyond 2027, but is that something that you think you have flexibility over as far as being able to return money to shareholders?
I think these are commitments which we wouldn't make unless we were pretty much 100% confident to deliver and absent any macro shakeups in the market. But again, our view is Jardine is a steady compounder. Right? Our goal here is to deliver multi-generational, steady compounding returns in our portfolio. And we're trying to do several things. Growing our dividends, because ultimately is something our shareholders are looking for. The buyback is another way to return capital to shareholders. But at the same time, we are not investing in 100% of the recycling we do and the growth that we're delivering on our portfolio to shareholder actions. There is also an objective, and one of the objectives we will announce today is we're trying to build at least $200 million US dollars of incremental additional profit through M&A in our portfolio. So that's going to be another target where we're trying to work toward. We do believe the group needs new verticals of growth. And for example, this radiology business we acquired, we think will be a substantial contributor to the growth of Jardines in the future.
Yeah, iMed was certainly the signal, right, that you are really pivoting the business to more high growth industries. What's more in terms of your appetite for M&A here right now? I mean, what sort of industries are you interested in targeting in terms of frontier tech and the like now, Lincoln?
So very much as you think about kind of our role here at the holding company is we're a balancer and manager of risk. We like many of our businesses in and of themselves, but there are parts of our portfolio we are overweight, and it's no secret if you look at our respective earnings. That doesn't mean we don't like those businesses as they are, but what we're trying to do with capital we are recycling is to balance and settle off that risk. We are right now, a very large portion of our profit is coming from Indonesia, and we are a long-term supporter and builder of businesses in Indonesia. But part of our effort right now is to balance off that risk with some OECD exposure. So some developed market exposure, like we're doing investing in and acquiring the largest radiology clinic in the Australia market with good compounding mid-double-digit growth earnings. So this is, again, part of my job in this group is not just to buy absolute return growth, but to balance the risk we have in our portfolio. So 5, 10, 15 years from now, all these businesses work well together. So in a sense, a lot of what I do here is try to get the orchestra to play together.
Yeah. Yes, which is more difficult than it sounds, especially coming from a background like yours, PE, going into a conglomerate, which I think we can talk about it in a moment. But Indonesia, I'm sure you're following what's going on there. How are you and your team looking at the macro picture in Indonesia? And can I ask you a direct question? Have you and your team actually considered reducing your exposure to Indonesia?
It is not something we're considering. We really do think Astra is one of the best operating businesses in Indonesia. So how do we grow Astra? How do we focus Astra? How do we do our own recycling efforts in Astra to make sure the capital is put against growing industries in line with this government's initiatives? That is what we're trying to do with the business. So we are not a short-term investor who's trying to go in and out of a market. We've been in Astra and been a successful partnership since 1997. We're looking to continue that partnership. So we know the macro right now and the capital markets have a negative view on Indonesia. Jardines does not. We're looking at ways to capitalize on ways to put capital to work and grow in this current environment.
Some have flagged that maybe, in order to really improve your capital allocation is that you need kind of full consolidation, that you need to fully acquire Astra. Is that something that you're actively considering now?
Acquiring 100% of Astra will be challenging, right? It is a very large business. We are the largest shareholder. And at the moment, we're looking at capital allocation within Astra rather than consolidating and privatizing Astra. That is not strategically our focus.
Well, talk to us about that. So within Astra, what would you like to see in terms of where your capital specifically goes there?
So if you look at our Astra basically has three major verticals. It has automotive, it has financing, and it has mining. Those are three primary verticals. Astra is an outstanding operator in all three of those segments. For example, in automotive, Astra is in four-wheeler, it's in two-wheeler, it's in auto parts, it's in aftermarket, it's in used cars. Many people focus on new car sales for us, but we're heavily focused on growing out and strengthening our two-wheeler business. We're continuing to strengthen out our auto parts business. Pak Rudy and his team have ambitious growth, both M&A ambitions as organic growth ambitions to strengthen the auto parts business, as well as our used car distribution part of our business. So even within Astra, there's so many different ways we can support and grow our businesses. This is what our support for them as a long-term investor is to be patient, support them with capital, support them with decision-making to build Astra for the long term.
Lincoln, I want to pivot and talk a bit more your portfolio in Hong Kong. A lot of us here are quite interested. There's been a lot of market chatter, I'm sure you know, about the reports that Jardine is looking to acquire CK Hutch's Welcome, and certainly, it'd be interesting. I should say, excuse me, Park and Shop business. Yeah. It's interesting, and I don't know how much you can comment on this here right now, but is this something that is actively happening now?
I think that's something, I think CK Hutch has come out and said that is not something that's happening. Ultimately, where has this come from? They are looking to list their Watson's business, and there are stronger parts of that business and weaker parts of that business. And I think they have been looking at options to exit certain parts of that business. We got caught up in those rumors, but ultimately that is a discussion to be had with them. What are they planning to do with their businesses?
And Lincoln, I guess, as you look at your Hong Kong exposed portfolio then as a broader question, what changes do you think we should be expecting?
I think it's one thing, we don't look at Hong Kong in a monogamous manner, right? There is multiple elements of the economy here. And for example, we are extremely excited about participating in the growth of the Northern Metropolis. It's one of the reasons we'll talk about at today's Investor Day. Capital and support we're putting behind our engineering and infrastructure business. We have a great construction business, Gammon, which will benefit from the growth in the metropolis. Second, we have a business called JEC, which provides engineering services and maintenance services. They need to benefit from that growth. And one of the capital allocation focuses for me is how do we put more capital behind this engineering and infrastructure business so we can be a better participant in the infrastructure growth of Hong Kong.
Lincoln, it's interesting. I'm wondering, just want to get your intake in the last 6 months for you. Obviously, you're going to be having this Investor Day. What's been sort of the conversations that you've had with shareholders right now? Are there concerns at all about the investment model and the like now? I mean, the stock certainly has reflected that they're very open to the changes you have gone. But some say it still kind of trades the stock like a conglomerate. Are there more ways beyond just the buyback here to really kind of narrow that discount now?
Yeah, I think for us, with a conglomerate of this size, a radical transformation, quick transformation is not the playbook. I often describe to our shareholders and investors, this is a slow climb. And the biggest question we often get asked is, how do you reduce the conglomerate discount? And there are many tools to this. One is eliminating some of the inefficiencies in the group, which we've done by privatizing Mandarin, privatizing emerging Jardine Strategic. It is driving greater cash flow generation out of the group, which we're doing by increasing the dividend and having a buyback program. But it's also acquiring and building better earnings. And the visibility of that takes more than 6 months. buying a business, integrating it into Jardine's, helping it grow, if we can show the market, the playbook, that we are a good acquirer of business and good builder of business, which is ultimately what we want to be, in 3-4 years' time, the quality and value of our earnings will be better, and the market will value it more. So again, this is ultimately not a 12-month transformation we're going through. Jardine's has been around 194 years. We're trying to take the next 3-4 years to kind of progressively improve the mix of businesses we have to position us better for year 200 to 210 and beyond.
Lincoln, you mentioned earlier you want to see more of, I think just to, clarify, it's not so much de-risking the portfolio away from overexposure to Southeast Asia. It's simply increasing parts of the pie to OECD specifically. Where else in OECD do you want to see your capital at play?
Yeah, I think our first deal was in Australia, and it's a market I've had the fortune to work in a lot over my last decade of my investing career. So we'll continue to look at the appropriate opportunities to put capital to work in Australia. We'll continue to look at North Asia as well. We're building out a team with some capabilities to look at those markets. And we're looking for businesses that have more greater pan-Asia exposure rather than single country exposure. So we're not looking to do 10 deals like a fund manager would do over the course of 4 to 5 years. We're looking to do 2 or 3 deals. So it gives us the opportunity to be quite selective. And OECD is one lens we look at. Size of the business is another lens we look at. Quality of earnings, scalability of those earnings. So again, with basically a strike zone of looking at 2 to 3 deals, we can be quite selective of how we build our portfolio.
Lincoln, always great to have you on the program. Please come back. Lincoln Pan there, CEO at Jardine Matheson Holdings. Of course, you can read more about Jardine's move to become an active investor. That's right on the terminal here right now. You're watching The China Show. We talked about all the good news when it comes to tech overnight, right? And certainly when it came to SpaceX, when it comes to the double-digit gains that we saw for a second day, certainly does bode well that, things are still smooth sailing on that front. And really, everyone thought that, all this sort of glitches and what might actually impact where we are in this whole AI trade. It seems like, at least for now, things are okay.
Yeah, another 20% gain.
Yeah.
And I think if we do another similar move, SpaceX would enter the world's top 5 companies by the end. Well, this time tomorrow. I mean, we're knocking on the door.
It's just 3 days.
In just 3 days. It parachuted into the top 10 as one would slide into some DMs. Okay. Let's also get very, very quickly, NVIDIA, in case you missed that, also raised quite a bit of money, 25B, 7 tranche, I believe, 7-year in the bond markets, 3 all the way down to 30-year. Pricing is out. I won't get into the details, but quite tight, obviously, given, of course, how much cash that company already has. But yes, that's the other big deal to tell you about in as far as the AI trade is concerned in the U.S.
Yeah, and then we've got news here from Hong Kong, from China here of course, Red No, right? Xiaohongshu. I'm sure you've heard of it before. This is the creator of the Chinese social media platform, said to be preparing for an IPO in Hong Kong by the end of June. Let's bring in Balazs Pence, our Asia Equities Deputy Managing Editor, who joins us now with more. It's a well-known name here, especially in China. What's the rationale for the IPO?
Well, we've been hearing that investors in this company, it's a 13-year-old company, have been pressuring them to take this quite opportune time for Chinese listings. Chinese tech companies obviously have been doing really, really well with their IPOs, so they think this is a great time to do it. The last time we heard, Xiaohongshu had a valuation of $31 billion. Their revenue, it looks like it's about $3 billion a year. So if you apply multiples, that even looks a little bit lower than some of their competitors. So it is an interesting time for them. But also, they are not an AI company. They are not a chip maker like the big wave of Chinese tech IPOs that we've seen. So there are questions about how long that valuation might sustain or what multiples investors might apply there, what might be reasonable for this company. And if we talk about AI, there are also questions about how the rise of AI will affect their own business models. So this looks like a great window for them to try and go public, and we'll see what valuation they can get there.
And whether or not part of the retail tranche will go into some of their big users, of course, Gen Z, and I think that's what Robert Lee is pointing to as far as that what we're looking at there is good. The other one, just to ask, Enflame.
Enflame is an interesting company. It's the last one of the four little dragons, these Chinese AI chip makers. One of them, More Threads, you might remember in December, started this big wave of Chinese tech IPOs that got huge retail interest. We got thousands of times oversubscribed IPOs with big pops at the open. This is the last one coming out. The interesting thing about Enflame is their main customer that buys about 80% of their products is Tencent. Tencent also owns 20% of the company, so they're really reliant on them. Last we heard from the company, they said that they cannot keep up with the demand for their chips from Tencent, so that's why they need to raise money.
Good problem to have. Yeah. Balazs, thank you so much. Balazs Pench there, our Asia Equities Deputy Managing Editor here. We'll leave you with a look at markets, how they're looking. We're flat to slightly higher on the CSI 300 compared to others as well you see on your screens.
A contrarian view here, because I think our structural view is that if we think about Chinese economic rebalancing, we're actually thinking it differently. We're not thinking that policymakers are going to meaningfully boost consumption or consumer sector. Well, consumption really is driven by mostly three things, job security, wage growth, and also households' willingness to take on more loans, and none of the three is happening in China.
Yeah, there we go. Yeah, they joined us last week, and that's interesting because that comment is expected to play out and show up in the numbers. And as far as industrial production is expected to increase, but retail sales remain quite sluggish here.
Yeah, I mean, you're talking about a negative 0.2 print when it comes to, of course, retail sales. So certainly that brings us back to levels we haven't seen since the pandemic. So this consumption malaise still continues here. And so we'll watch very closely how that impacts, right? Does it actually restrain this very export-driven bounce when you see an industrial output and investment that's set to also extend that decline as well? So we'll continue to watch what goes on. In the next hour, we're going to immediate reaction with UBS Securities coming up next. Plus, of course, more on the BOJ, too. This is Bloomberg. Welcome back to the China Show. We are just moments away, of course, from that press briefing from the Bureau of Statistics there in Beijing as we count down to this data dump that's expected any second now when it comes to May. We're not expecting a strong set of numbers, especially when it comes to the consumption and retail side of things. But so the macro risks are certainly going to be front and center in this latest set. We did get those home prices earlier. That did kind of show the continuing trend that we're seeing, at least there as well.
A slight reacceleration in the drop in home prices compared to the previous month. But again, I'm just being a bit more particular about that, just given it is a 0.1% increase. But suffice to say, the home prices, the property market seems to be still very much caught in a very sluggish phase, which goes into consumption. We are just getting the numbers, in fact, crossing the Bloomberg terminal right now as we wait more context coming through out of the briefing that is about to start in Beijing. Let me get started with what I think is the standout here. Retail sales year on year, a drop of 0.6%. That is a drop that is quicker than what economists had been forecasting of negative 0.2. What we got was negative 0.6. And that's near the low end of the projected range, softer than expectations, already soft expectations as a bar.
Yes. So that brings us to some of the weakest prints that we've seen since the pandemic. So certainly that's not a good sort of signal there. Industrial production actually did beat the median estimates, though. So that's still looking strong, thanks to what we've been seeing when it comes to exports and the like. So that's up 4.5%. When it comes to the year-to-date numbers, it's 5.4%. So both of those data points were better than expected. Fixed asset investment, that's where you're continuing to see them extending those declines, if not actually worse than what we saw in the previous month. Negative 4.1% decline when it comes to fixed asset investments. The median estimate was for a drag of 2.3%. So this is actually close to double what was expected there in terms of the declines there. Certainly there, Dave. What else are you watching on?
Yeah, property investment year to date, another negative print. This one coming in fact, negative 16.2%. This is a year to date number. It's year on year compared to that same period going back the first 5 months of the year. And we were expecting a drop, but not a drop of this magnitude. We were expecting a 14% drop. What we got was 16.2%. We're also looking at the jobless rate actually coming in at 5.1%. This one actually coming in tighter and better than expectations of 5.2%, which was the estimate, which was also the jobless rate for the month of April. So overall, slightly mixed, more negative in as far as some of the consumer-facing reads are concerned, particularly this retail sales number seems to be the first contraction going back to 2022.
Joining us now from Beijing is Yu Song, Chief China Economist at UBS Securities. Song Yu, it's great to have you on the program. At first glance, maybe can you tell us a bit more about your initial take on these numbers?
Hi, it's good to be here. Yeah, it's mixed. But one thing I would want to say is the IP data was okay. Wasn't particularly strong, but not quite as weak as it was in April. One other important data, which is not, I think the market should pay more attention to, is service output index, and that number was okay as well, slightly higher than it was in April. And these two, IP and service output, these two indices have a fairly close correlation with GDP data. So I think 2Q GDP data, by the way, looks it's going to be weak, but not quite as weak as one would expect from April data.
Right. Ed, can I ask you then, why place less weight on retail sales at this point in time?
Not necessarily less weight, but relative to service output index, the importance, I think it's lower, just because the two tend to have much lower level of correlation. One reason is it's not necessarily a good proxy for overall consumption, which is often assumed to be the case. Don't want to dismiss the weakness, right? Like it's meaningful, but I think when we try to gauge the likely outcome in terms of 2Q GDP, the service output index is way more important.
Right. So how would you, on aggregate, how would you describe consumption at this point then?
Consumption is clearly not strong. Right? So from 1Q, there definitely was a meaningful slowdown. But I think the biggest delta probably happened in the fixed asset investment space instead of consumption. So both actually show decent growth in 1Q of the year, and both I think likely slowed down going to the second quarter. But in terms of the contribution to the slowdown, fixed asset investment growth is made a bigger contribution. And the key is the fixed asset investment growth under GDP accounting is not the same thing as the monthly data that we just saw. We're talking about more than 40% of GDP.
Yu Song, a 4% drop in fixed asset investments, right? It seems to be continuing to see downside when it comes to, whether it's the property sector that's dragging these numbers. We had a story, earlier a few months ago about how even fiscally the government is spending less. What do you think is attributing to this slowdown in investment now in the economy?
I think it's policy-driven. Policy was pretty proactive in the beginning of the year. So be it government-led investments or private investments, the momentum was reasonably strong. Partially because this is the start of the new 5-year plan period, and this is a tendency to be relatively proactive at the beginning of the year. And I think after they got a strong 1Q, there was a adjustment to that policy to a less proactive one. And probably they overshot in terms of the policy adjustments magnitude. I think there was likely intention to slow down things somewhat, and there was probably overshoot. But the early point I was trying to make is the monthly fixed asset investment data is not the same thing as gross fixed capital formation under GDP accounting. Investment is more than 40% of China's GDP. If it is falling at 4%, there's no way that it can get anywhere near 5%. So I think investment is clearly weak, just not quite as weak as the monthly FAI data would indicate.
Right. Well, the other component there that we haven't talked about, which could offset and has remained a good offset, is exports. What is your outlook for exports as a counterweight to some of the weakness in the economy? And can exports hold up amidst what's really become, you look at the exchange rate, 40-month high on dollar, 40-month low on dollar China, a very strong currency?
Yeah, exports growth has surprised the market and me so consistently over the past several years. So sometimes I want to give up on forecasting it because the track record has been so bad. And I think policymakers now more or less have done the same thing. A lot of them probably have given up forecasting what is going to happen to it. And so there's a tendency to react to export slowdown. So I think the current assumption is we don't know when export will slow down, and we do something once it does slow. And so the key is to monitor what happens on a real-time basis. The thing about 2Q data is, even given the very strong growth in export growth, which again surprised the market on the upside in 2Q, the overall level of growth is still too weak. So this is clearly the headline growth, given very strong export growth, is clearly not within the comfort zone of policymakers. And so I would expect them to take some actions pretty soon. Otherwise, there'll be pressures in terms of reaching the annual growth target.
So there's a lot of questions among your peers about whether we are seeing reflation in this economy. Obviously, we've seen inflation come back here. I think the Iran war certainly has helped in flattering some of the numbers and adding to the price pressures there. But now that seemingly it looks like we're getting close to the end of this war, I mean, do you think that China could go back into disinflation or deflation here, or do you think that this reflation trend can continue?
Yeah, one thing is reflation actually started before the Iran problem arose. And so 4Q of last year, for example, GDP deflated on a sequential basis was already around 0. So timing-wise, it happened before this Iran thing. And second, if you look at the breakdowns, it's not all driven by the reflation has not been all driven by oil and gas price increase. Other components in terms of PPI made a contribution as well. And one area which deserves particular attention is AI or tech-related product prices rose as well. So I think it's both. So this is this demand element and also supply element. So if we get a smooth oil price trajectory going forward, or maybe some correction as assumed by the markets, I think what we should expect is PPI is likely to peak in the second half of the year, and it's going to start to fall. CPI probably will rise somewhat, and then you get in this combination of falling PPI toward the end of the year, and the CPI probably will follow a rough trajectory, but at a much lower level. So I don't think China is going back to outright deflation, but the recent reflation has a temporary element to it, so which is going to disappear in the coming months.
Interesting. So you mentioned AI prices are moving up. So what parts of the inflation basket do you see more pressure, more upward pressure? In other words, what I'm trying to ask is where do we get better margins in as far as corporate China is concerned? And sorry to pivot, there's another question I want to ask. Is you mentioned policymakers will need to take action before it's too late. Can you talk to us a little bit more about what policy action, where it's needed at the moment?
On the second question, I don't think they can choose to be picky. They need to do everything. We need monetary, fiscal, administrative, further supports on the property sector, which have already shown some signs of recovery or at least stabilization, at least in some regions. But it's a very fragile recovery so far in that sector. And if we don't get continued policy supports, chances are it's going to fade. So our assumption is we will continue to see further policy supports for the property sector, but there needs to be a package. Not quite as so the baseline we have is not quite as aggressive as the one we saw back in September of 2024. But in terms of the nature of policy adjustments, it should be something similar. It cannot be just one of this. On inflation, one thing I want to say is the current level of PPI is pretty high. It's getting close to 4. It probably will breach 4 in the next 2 or 3 months. But I don't think this is a constraint on policymakers. They can loosen and they should loosen, and I think they will. The more important inflation gauge for policymakers is CPI. And it's running at 1.2, which is definitely not high. If anything, it's actually a pretty Goldilocks level. And so I don't think inflation should stop policymakers from loosening policy. Now, one thing people are concerned about is this gap between high CPI and low PPI. Right. High PPI and low CPI. And that gap is often viewed as an indicator of margin squeeze. But if you look at the correlation between profitability data and this gap between CPI and PPI, the two actually tends to be positively correlated historically.
Yeah.
Yu Song, thank you so much for the insights. Let's talk again soon. Please, Chief China Economist there out of our Beijing studios there, out of UBS Securities. For our Bloomberg subscribers, you can turn to your terminal for more on this ongoing story. TLI Vigo, more context analysis. And as you can see, of course, I believe that is the exchange rate that's moving up there. So some weakness coming through in the Chinese currency. So lots more ahead, of course, including another big macro event.
Yeah, still ahead. The Bank of Japan looks set to hike rates today to the highest level in 30 years. We have ING's senior economist, Minju Kang, joining us later on this hour with her outlook and what to expect at that press conference here later today. This is Bloomberg. All right, we are checking Japan. Could be the next thing to watch here in the next couple moments as well. Of course, the BOJ set to hike rates. You look at how the votes and really what the economists are saying. Looks more than likely they're going to hike. 62 versus 1. One lone wolf who thinks that they might hold here today. So largely expected they're going to raise rates to that 1% threshold here, which is the highest we've seen since 1995, Dave.
Yeah, that's like an anagram color of the Japanese flag in reverse.
Oh!
Isn't it? But I mean,
our producers did it intentionally. We wondered if you would notice.
Oh, okay. And 62-1 is also, I believe, if you think the person that is calling for a hold has no chance, you clearly missed the match between Spain and Cape Verde. Cape Verde overnight, right? And that massive upset
match. There. That goalie, man, became an instant rock star
What
overnight.
a hero. What a hero. I don't want to talk about the BOJ. Can we just talk about the World Cup? No, anyway. Actually, Japan did quite well. 2-2 against the Netherlands. Anyway, I believe we're quite tight on time. Let's bring in our team to talk not about the World Cup, although they can chime in the World Cup. Sherry An, our Asia Trade co-anchor, is outside the BOJ in Tokyo and in Singapore for us to talk us through, of course, the rates at FX angle. Ruth Carson here. Sherry, let's start with you. So they're about to hike.
Yeah, I mean, you guys said it. It will be really a nail-biting moment for that analyst that thought that the BOJ may not move today. I mean, the expectation right now in the consensus is that we are going to see that 25 basis point hike to 1%, taking the cash rate to a high that we haven't seen since 1995. Also, the first move since December. And what will be really interesting is that this is a very unusual meeting, right? Since the 1980s and the establishment of a BOJ-related law, we haven't seen a governor sit out a policy meeting because of health concerns. Governor Ueda hospitalized because of an infection from a liver cyst. We do have his deputy governor Himino now chairing the meeting, and his other deputy Uchida now who's going to carry out the press conference. And this is very, very high stakes, isn't it? What message will he send? It was already high stakes if it was Governor Ueda, who earlier this month actually signaled that inflation risks might be higher than growth risks. So we'll be watching that very closely at a time when Ruth can tell you more about it, but the Japanese yen is just stuck at that 160 level.
Yeah, Ruth, I was going to bring you in. Is anything going to happen today that could actually lift the yen?
Yeah, it's absolutely the currency to watch, in the past 24 hours and definitely going into the meeting. It's very interesting talking to traders, investors, strategists out there to see that even though a hike is a virtual certainty cemented by markets, dollar yen is at 160. And if you talk to a lot of people out there, it's incredibly hard to find any yen bull. That just sort of underscores how unusual the situation is. But what's the judgment here that's being meted out to the Japanese currency? BOJ behind a curve. You don't just hike today, markets are demanding more. Bond yields still high. Is it actually attracting investors? Is it high enough? All of this, and of course, we also have the Iran war developments. Peace deal, will it be signed? Will oil prices continue to fall? And, and what does that mean for inflation in Japan? All of this is driving dollar yen trading, and that is why we're still seeing at 160 level for the pair.
Sherry, can I ask you about the fixed income part and, these purchases of JGBs? How significant will any announcement be today?
To Ruth's point, we have seen JGB yields pretty high, right? I believe the 10-year yield just last month touched that 1996 high. Now, this instability in the JGB space last year also led to the Bank of Japan cutting by half the reduction of JGB purchases. We have seen reports widespread this week that the BOJ might hold and might stop the reduction of JGB purchases given this instability in the JGB space. Of course, the optics will be very important because does it look like the BOJ is sort of bowing to the fiscal concerns of the government? Bloomberg Economics doesn't necessarily think so because we have seen the market instability in the JGB space. So if you're hiking rates, perhaps stopping the reduction of JGB purchases might be a good signal for the markets. For the time being, we know that at this pace, at the current pace, the BOJ is reducing the JGB purchases by 200 billion yen per quarter.
Ruth, everyone's watching this press briefing with the Deputy Governor Uchida today. What do you be looking out for? What questions would you ask him?
Oh, look, if I could have, 5 minutes with him, I would definitely be asking about his views on inflation. But look, in terms of traders, investors out there, all of them, it would be fair to say, would be looking and listening in for how hawkish the BOJ will be. As I said earlier, and as Sherry sort of alluded to as well, dollar yen at 160. It is unusual when you consider that, the rate hike expectations are still there for the BOJ. So the question is how hawkish the BOJ Deputy Governor will sound and what that means for dollar yen. And remember, it's not just the dollar yen story. It's Aussie yen, it's euro yen out there as well. So yen in the selling crosshairs. The question is, when do you buy? And if we get a hawkish enough sounding commentary from the press conference, some investors might be dip buying.
All right, team, fantastic. Thank you so much. Ruth Carson in Singapore and Sherry on, of course, live outside the Bank of Japan, where that decision is kind of imminent at this point in time. All right, just very quickly, just to recap the data that we got out of mainland China. A miss on most, although it wasn't all bad news when you look at things like industrial production, for example, and some of the other beats there. 4.5% year on year, but retail sales number also catching quite an eye catcher here.
Yeah, I think it's the worst print we've seen basically since the pandemic. So that negative 0.6 print, also that negative 4.1% print on fixed asset investments was a bit of a disappointment there as well. We got plenty more to come. This is Bloomberg.
Right, welcome back. Ongoing briefing right now in Beijing. The economic performance has been impacted. There we go, a verb. Because of the war and also the weather. In case you missed that, some of the economic indicators that have come out really on the softer side of things, and market is reacting also to those soft numbers.
Yeah, you take a look at how Hong Kong is doing versus the rest of the indices in China, and you are continuing to see this divergence between what HS Tech is doing and Shenzhen. Shenzhen continues to outperform here right now. In fact, the Chinex is up more than 1.3%. So that sort of gap continues to widen. HS Tech is lower by about 1.6% here this morning. We're flat when it comes to Shanghai. When you take a look when it comes to individual movers, we're watching some of these defense stocks in Korea here. So there has been some movement. There you go. A lot of it here. They jump when it came to this Rheinmetall LIG defense JV plans here. I hope I pronounced that right. But there you go. You're seeing a lot of these defense stocks moving here. And Japan's Terra drone. That's one to watch here this morning as well. Got plenty more to go. This is Bloomberg. $11:29 a.m. in Tokyo. Yeah, we are counting down to that lunch break and then also that BOJ decision that could be happening here, right? Put your bets in. What time are they going to do it? You know, history suggests if they're going to do something, they're going to do it
later. They'll push it back. They need to, I think, my intel tells me.
What does your intel tell you?
No, not I have insider information on what the Japan is going to do. But I think the reason why it takes longer for the decision to come out when there's a change is because there needs to be some translation that needs to take place on the statement.
Yes.
Right? And for anyone that follows the BOJ, I believe until now, they still scan the policy statement.
Yeah.
And then they attach the image on the website. So it's an added step for journalists, but we're used to this anyway. But just bit of inside besuboru, as they say in Japan.
So you're seeing when it comes to risk assets overall, I mean, Japan assets are pretty much just kind of holding their breaths right now. They're not really seeing that much conviction out there ahead of this big decision, right? First rate hike, or at least rate hike to 1%, the first time since 1995, right? And so certainly it's going to be something that'll be interesting given the fact that Ueda-san is not going to be there to announce that and really be there for that press briefing later on this afternoon. So it's up to the deputy to really deliver that message here. Interesting when it comes to oil markets. We got a call from Morgan Stanley.
Yes, they're cutting their Q4 forecast to $80 a barrel on the back of this Hormuz deal that was announced. We believe it was signed digitally, but of course we'll get the formal. Do we call it, is it a ceremony? But anyway, a formal signing.
Signing day, yes. Yeah. It's interesting how quick, I guess, the market's already kind of moving their forecasts, even though nothing has been agreed upon or signed yet. But Morgan Stanley says the Iran deal to spur higher oil exports through Hormuz. That's the rationale around that call. But yes, we're around that $80 level when it comes to WTI here this morning. But yeah, it's been relatively, I guess you could say, subdued. right now in the move?
Tentative is another word for that.
Oh, yeah. Another one.
Yeah. Despite, of course, a very strong session overnight, and I think we're sandwiched between important central bank decisions. The BOJ, of course, and we have the Fed coming through.
RBA.
RBA is in about 2 hours from now. To discuss this dynamic, let's bring in Anthony Stevens, of course, a markets reporter here, to help us understand why things remain subdued here.
Yeah, it's a bit of a change from what we had overnight, right? We had double-digit moves in tech. Here you're struggling in Asia to get around 1 or 2% moves. And one of the reasons for that is probably because of so much risk management needs to be done in Asia ahead of these central bank decisions, right? You have the RBA, you have the BOJ, then you have the Fed. And it's actually the kind of direction of travel in the guidance from all the central banks that is important, rather than what they actually do, which is relatively well telegraphed across the board. RBA to hold, BOJ to hike, Fed to hold. But it's what they think is the impact of the energy crisis in terms of go-forward inflation expectations that the market is hanging on here. And that remains very important given that US gas prices, for example, are 30% higher than where they were before the war. So the transmission mechanism of oil at 80 is in play here. And that is making people a lot more cautious. Now, that being said, within the tech complex, you have a return to dispersion here. So people are playing their favorite themes very aggressively, but it's kind of canceling each other out at the index level. So, for example, in Korea, you have defense names that are up 20% plus. In Taiwan, you have the optical imaging names. Largan, for example, which is late to the imaging game, it's up almost limit up. So now we're returning back to some of the stuff we discussed earlier in the earlier weeks, very single name kind of stories.
Okay, if we're getting close to the end of this war, I mean, are there new focuses for the market now that you're looking out for?
Yeah, so the market now will be playing macroeconomic dispersion in a very big way, right? The US exceptional growth is becoming a big market risk in and of itself to the upside and the downside. You see American data being consistently good and data from the rest of the world being muted to negative at best. So the China data dump that we just saw is a great example of that, right? And that's going to continue to drive macro dispersion. China's economy is very dispersed. The consumer and the property sector continue to struggle while exports are very strong. So you see dispersion pick up there as well, HS Tech versus Chinex. So dispersion within themes, within countries and between countries is going to be a much bigger theme in the back end of the year rather than everything trading together on these Iran headlines.
Anthony, thank you. Anthony Stevens there, our Bloomberg Markets reporter on what to watch out for in these markets. And, of course, as we stand by for the next event risk, which is the Bank of Japan's rate decision, let's bring in Minju Kang, senior South Korea and Japan economist at ING. Minju, it's great to have you. I know you're expecting a hike here today, but beyond just that headline, what are you going to be focused on the most today?
Yes, market widely expected 25 points rate hike, but there are still be several other things that markets should follow closely. The first should be whether this decision would be the unanimous or it includes a minor dissent. The newly appointed board member Asada will reveal his preference for the first time. So this is going to be the first thing we should watch. And secondly is that the Deputy Governor Uchida's press conference remarks on behalf of the Governor Ueda, how he would lay out the future policy path. And also separately, the BOJ will also announce their plan on the JGB purchase program. They have been reviewing this program, and then they are going to decide whether they're going to keep this tapering pace or reduce or even pause this tapering. For our view, as it's a close call, but maybe the BOJ is ready to pause the tapering, because when they decided to do this tapering, their rationale was that the very long YCC and also this quantitative easing is kind of hurt the market function of the bond market. But for over the last couple of years, we've seen that this market function improved. So maybe they decided it's time for them to slow down or even pause the tapering.
Okay, now in terms of, so we are expecting them to hike, and we will certainly appreciate more details on what they plan with the JGB purchases. What's the tone you think we should expect from the press briefing? Will they signal? Will it be a hawkish one? What are you expecting?
Well, actually. Given their very gradual move in policy rate, hikes was that one of the reasons was because of this very high uncertainty surrounding the Middle East. And if this MOU is signed and if this the geopolitical tensions ease, probably it will give more complaints for the BOJ, and they will focus more on their the internal domestic economy conditions. For also, we believe that recently the Japan economy shows quite a resilient growth, and also the inflation number was quite low, but was because of this very big help from the government. But we believe that the BOJ will look through this current softness, and they're going to focus more on underlying inflation trend. And now that's why we believe that they introduced these new inflation measures like core CPI, core inflation excluding institutional factors. If they exclude these institutional factors, we believe that underlying inflation trend is still there and also firming up and broadening. We can see it from the other pipeline prices numbers, and also plus 5% wage growth they have reached this year's Shunto. This will continue to give more upside risk for the inflation. And also, the weak Japanese yen is another key factor for them to move on more focus on underlying inflation. So summing up this, we believe that, the BOJ will likely to be more hawkish.
Yeah, I was going to get your take on dollar yen, because it seems well telegraphed that they're going to hike, and yet I still see dollar yen at 160. Is there anything that they can say today to change the direction of the yen, or are we still in intervention risk too?
I think, over 160 level, there has always been, intervention risk, we believe. However, this time, we have seen that, after this really sizable intervention in, May and April time, and then actually, it didn't last long. So probably the more fundamental change of their policy direction is the key to change the direction of the Japanese yen, we believe. So that's why in that term, probably the BOJ would like to give more hawkish comments and give us a more hawkish signal to the market to the level of Japanese yen is not the target of the BOJ. However, they are concerning about this upside inflationary pressures. So we believe that, they also, their hawkish masses will kind of have some impact on the Japanese yen market. However, if still stays above 160, probably, yes, we believe that the further intervention is likely.
At what level, and the reason I ask this question is, they've been saying for a long time they need to normalize policy, almost agnostic of what goes on. At what point does that then become tightening? In other words, at what level of the policy rate should we consider that being restrictive?
So actually, looking at their CPI number and we calculate the real interest rate, it's the Bank of Japan's policy rate is still in deep negative. So we believe that they should raise their policy rate to at least to their neutral level, which is a very big wide range, but 1.5% to 2%, 2.5 percentage points. So we believe that at least that the BOJ is reaching to this lower end of this, the neutral policy rate. Then probably they're going to see much more meaningful impact on the currency as well. And also the Fed's, rate hike, expectation have changed recently quite a lot. And this is also going to have some impact on the JPY as well.
The governor did mention also about the instability that we're seeing in the JGB market could help make the case for a hike. Do you think once they do so, the JGB market could stabilize a bit, or do you still see kind of longer term upward pressure for yields in the JGB market?
We believe that, by raising their policy rate, we believe that they can curb down or prevent the inflation expectations, raising further additionally. So actually, the actual policy rate hikes is going to help stabilize the JGB market, we believe. And also, like I said earlier, that we believe that they're going to moderate the pace of tapering. It also likely to give a signal that they'd like to see they'd like to see this more stabilization of JGB yield move, because for the last couple of months, the JGB yields was showing the very unique move. When other developed market bonds yields came down, actually the JGB yields actually shown the very rapid hikes. So we believe that this kind of all together, like not only just policy rate hikes, and also this slowing down, moderation of the tapering is going to help the stabilize the JGB market move.
That's very hard to understand, the moderation of the tapering, but such is the world we live in. Minju, thank you so much for the clarity. Minju Kang, there, senior South Korea and Japan economist at ING Bank. Let's take you back to China, this ongoing briefing out of Beijing, giving us more context really on the numbers that they just released 41 minutes ago. So just one note on the retail sales number. So it actually came in softer, much softer than expected, in fact, contraction of 0.6%. And the context here is the drop in May was because of the high base effect that we had last year.
Yeah, so that didn't help for the numbers there. In terms of what they're also saying, they say consumption will, capability needs to be strengthened. So the consumption will. It's interesting, right? Because obviously what we've been seeing and why, the consumption picture has weakened is because of some of these kind of trade-in programs, all the subsidies that have started to fade, right? And that's really kind of showing up in these numbers here. So they're still talking about the domestic side of things here that needs to be strengthened. As we talked to Yu Song from UBS Securities, right? When it came to the policy sort of reaction, he says they do need to take action soon, right? And what could policymakers do? And he says they have to go about it at everything, right? And it can't just be a kind of one-off thing. He said it has to be in the form of a package, especially when it comes to the property sector. Yeah, that was quite telling coming through there out of the UBS Securities economist earlier on. Interesting choice of words, will and capability. I mean, the definition of demand in economics is consumers that are willing and able to be able to pursue that. And certainly demand is wanting there. Okay, let us, I think we can leave that there for now in case you want to know more, of course, on the data that did just come through in the last hour or so. Of course, TLIV, go on your Bloomberg terminals. We'll take you straight back. Well, we'll pivot away also in Beijing. As you can see, these are live shots there. And of course, you have the Chinese president, Xi Jinping, is meeting with the visiting Myanmar president, Min Aung. I believe, of course, that is taking place also in Beijing, as we just mentioned. Yeah, so this, as of course, the Southeast Asian nation is seeking for some stronger trade ties with the likes of China. So we'll see. This is marking the Myanmar leader's second state visit since taking over as civilian president just a few months ago. We have plenty more to come. This is Bloomberg. Well, the interim peace deal between the U.S. and Iran is at the center of discussions at the G7 summit in France. World leaders welcomed the agreement, but doubts remain on when it will go into effect or how exactly it will lead to the reopening of the Strait of Hormuz. Bloomberg's Tyler Kendall reports.
The conflict in Iran is dominating the conversation at the G7 as we await further details on a potential signing ceremony as soon as this Friday here in Switzerland and what exactly is in this memorandum of understanding. Of course, the largest component at the moment is that both sides say that we can expect a reopening of the Strait of Hormuz. But our own reporting here at Bloomberg News indicates that some G7 allies are wary about the timeline, even as President Trump doubles down that it will be fully reopened by the end of this week.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
There are also questions about longer-term security in the strait after Iranian state media reported earlier today that the country intends to keep its grip over the waterway after the 60-day extension of the ceasefire through charging fees related to navigation, insurance, and environmental services. A senior U.S. official who briefed us reporters ahead of this trip did acknowledge that the U.S. understands that it will take time to reopen the strait for a few different reasons, including that there are still mines that are placed in the waterway and also that commercial shippers appear to still be wary amid reporting from Bloomberg News that many of these shippers are seeking more tangible details on how the safety of the waterway will be secured. President Trump on Tuesday is expected to meet with some regional leaders on the sidelines of the G7, including those from Qatar and the UAE. In Geneva, Tyler Kendall, Bloomberg News.
All right, here are some of the corporate stories we're also tracking for you today. The creator of Chinese social media platform RedNote is said to be preparing for an IPO in Hong Kong by the end of June. Sources tell us Xiaohongshu is working with advisors on a potential listing that could rank among Hong Kong's largest in recent years. The app, described as China's Instagram, has grown into a lifestyle and social commerce powerhouse. Shanghai Inflame Technology has received approval for an IPO to raise $888 million on the Shanghai Stock Exchange Starboard. The Tencent-backed company plans to use the proceeds to develop AI cloud chips and related software. Inflame is the last to go to the market of the China so-called Four Little Dragons, a group of leading AI chip makers. Fox shares tumbled after it announced a deal to buy streaming platform Roku for about $22 billion. Now, the deal combines Fox's content with Roku's platform of more than 100 million users, creating the third largest player in the U.S. television market by viewing share. Fox is targeting growing demand for cheaper streaming and competing with Amazon and Netflix for ads. We got plenty more to come. This is Bloomberg.
I don't think they can choose to be picky. They need to do everything. We need monetary, fiscal, administrative, further supports on the property sector, which have already shown some signs of recovery or at least stabilization, at least in some regions. But it's a very fragile recovery so far in that sector.
Okay, that was the chief China economist at UBS Securities who joined us earlier on right after these numbers broke, and just really giving more context. And I think his point was, well, for one, GDP growth will be okay, he says, but there's a broad weakness in the economy and as far as consumption goes. And he thinks the policy prescription is that policymakers really need to take a look at more fronts in terms of support moving forward.
Yeah, I'm reading the T-Live blog now, and the team is getting more reaction from economists there, and they're saying that, this soft data print is really kind of ramping up the pressure on Beijing to deploy policy support. So the likes of ING, Lin Song, is saying that, the PBOC has basically been sidelined this year as we start to see this whole reflation that was supported by the Iran war. Yes. But now they're saying there's still a chance for a rate cut in the second half. Fiscal policy-wise, they say we are not expecting any major new stimulus packages at this point. So it might just be rate cuts, according to ING, at the moment. Beyond just the BOJ story, beyond what we're seeing in the macro story in China, of course, we do also have the RBA, right? Which is interesting because they kind of launched this tightening cycle earlier this year, right? After back-to-back hikes, it looks like they're set to pause this time.
It was a very quick change in the credit cycle there, right? Because they immediately resumed, to your point, this rate hiking cycle. And in fact, currently, I think they're back to levels at the peak of the last one on the cash rate. So we are expecting a pause. All but one are expecting them. And of course, this reference, of course, to the is this the uniform of the Socceroos? Yes. Probably is, right? Okay.
You got it too.
My
Fall
team,
right into it.
Inside baseball, my team has been trolling me all morning. I'm not colorblind. There you go.
He knows his flags and team colors.
Yeah, it's one of the first things they teach you when you're barely conscious, when you're 2 or 3, the colors of the spectrum. So far, that's held in here. The only thing.
I mean, James McIntyre kind of played it out and laid it out last time, right? He was already saying the last meeting that they probably should stop with the hiking soon. And saying that, if there's further tightening, it could prove to be a policy mistake here, given just the growth shock that they're seeing, business impact, consumer confidence. And so maybe this is the pause that's finally here. So that's one thing to watch for the RBA. Still BOJ, right? We could be moments away from that possible rate hike the highest that we've seen, or to the highest level we've seen since 1995. In terms of movers, we're watching, of course, what is driving the HS Tech lower here this morning. We were talking about 1% or more losses there when it comes to that gauge. And yeah, what's driving that has been Kuaishou, Billy. On the flip side, there you go. Zhipu continues to edge higher here by 9% here. So already adding to the double-digit gains that we saw on the back of that JPMorgan upgrade, and then also announcement of that new language model as well.
Anthony pointed this out. Investors are turning back to their favorites and what's worked, and Lenovo is obviously one of those ones as well. Very quickly, property stocks on the back of the home price numbers also out in the last hour and 30 minutes back. Shipping stocks are also in focus. Now we have a better understanding of what the agreement will likely be on Friday. It will include, according to some of our reporting, some of the commentary that's come through, will include toll-free passage across the Strait of Hormuz. That's it from us here on The China Show. We will see you all tomorrow. This is Bloomberg.